Mr. Chairman, we've already heard that a year after Britain chose to leave the European Union, FDI into our country has higher than it has ever been. But the good news is it is not just this year, for Britain is consistently one of the world's leading destinations for inward investment. While the UK accounts for just 3% of global GDP, we are able to attract up to 15%, 5 times as much of the world's foreign direct investment. But we must always remember that foreign direct investment isn't just some financial statistic on a piece of paper. FDI creates real jobs, some 70,000 alone last year, 70% of which were outside of London. FDI raises productivity with new management practices. And FDI drives innovation, which fuels our future prosperity. Having spent my professional life before politics working with and investing in businesses from California to India, I know that whilst our future trading relationship with the EU will of course influence FDI decisions, it is important to put that one factor into proper context. The pages of the Financial Times may talk of little else these days, but it turns out that only 20% of FTSE 100 annual reports even mentioned Brexit this year. Mr. Chairman, imagine yourself in the shoes of a CEO of a global company deciding where to make your international investment. When you looked at all the factors that would drive that company's investment decision, you would soon see that Britain is excelling in almost all the areas that are relevant to you. Absolutely.
I think he makes a very valid point. However, and when businesses do look to relocate, corporation tax is something they do pay attention to, but they also think about the tax that their employees will pay. And would he agree with me that it's a mistake for Nicola Sturgeon to make Scotland the most overtaxed society in the United Kingdom?
I couldn't agree more with my honourable friend who makes an excellent point, and I'm just about to come on to the various factors that drive that decision, and of course the competitive tax regime, particular for employee taxation, is a key part of that. When it comes to human capital and a research base, Britain is home to 4 of the world's best 10 universities. When it comes to a competitive corporate tax regime, our corporation tax of 19%, as we have heard, is the lowest in the G7. When it comes to supporting entrepreneurs, our EIS and SEIS programs and entrepreneurs' capital gains tax relief are second to none. When it comes to the regulatory costs facing your company, Britain is ranked by the World Economic Forum among the best large economies across the world. When it comes to getting your company the finances it needs, Britain boasts the most liquid capital markets anywhere in the world. And lastly, when it comes to a legal framework that you can rely on to protect your investment, 1/3 of the world's population lives under the security of the English common law system. Mr. Chair, these are all the key drivers of foreign direct investment, and on every measure, I am proud to say a Conservative government has delivered. Ensuring our universities are well funded, reducing corporate tax rates while increasing tax revenues, creating the SEIS and EIS programs to fund hundreds of thousands of new businesses, and cutting pages and pages of unnecessary red tape. We can look at the outcome of all of this. Today, almost half of Europe's billion-dollar startups were founded here in the United Kingdom. And the World Bank ranks Britain the best major economy in the world to do business in. Better than the United States, better than Germany, and better than France. And while taking Britain out of the EU on the best possible terms is, of course, an important task, more important still will be the task that lies beyond it. For just as Britain has never owed its success to Brussels in the past, we cannot expect Brexit itself to guarantee our success in the future. Staying at the world's cutting edge will require constant dynamism from the government. And from my own experience, I would point the Minister to 3 particular areas. Firstly, at 1.7% of GDP, our R&D investment is still below the OECD average of 2.4% and half the rate found in Germany's. Secondly, our nation's infrastructure, from mobile telecoms to runways and airports, has not kept pace with the growth of our prosperity. And according to the World Economic Forum, deters investment, and we rank very low amongst large growing economies. And lastly, our skills base lacks enough young adults with technical qualifications just below graduate level. In fact, only 10% of adults hold such a qualification, putting us towards the bottom of the OECD league table. And it is a shame that amongst 16 to 24-year-olds, literacy and numeracy are no higher today than they are amongst people in their late 50s and 60s. I'm confident that the government understands those three challenges, and its new industrial strategy has the potential to keep Britain on the cutting edge. I would, however, remind the Minister that we do not live in a static world. Everywhere you look, countries are innovating, looking at ways to attract capital, human capital, financial capital, and corporations to their shores, and we must constantly be innovating ourselves. We need to look at smart regulations, infrastructure decisions that are holding things up, and continue, in spite of the current climate, to support free enterprise, for it is the best way to ensure our nation's future prosperity, to raise living standards, and to pay for the public services that we value. In conclusion, Mr. Gray, the $250 billion that overseas businesses invested in our shores last year were not brought here by Brussels decree. That capital came because international investors know that our citizens' ingenuity, our government's leadership, and our nation's world-class institutions will always provide them with a return. And I'm confident that under this Conservative government, that will continue to be the case for many years to come.